And good afternoon, everybody. It's an honor and pleasure to be here among the elite crowd like you. And just to give you a brief about PropEquity, because most of you might not be knowing, it's India's largest data analytics company in the real estate sector. So we cover more than 40 cities, 50,000 projects, more than 9,000 developers. So that's the database which we have used to prepare this presentation and give you insight about residential market, how the growth has happened. So before I start, I would like to understand from audience. So what's your feel about the real estate sector in last 1 year? Good, bad, ugly? Let me put it this way. How many of you feel, please raise your hand, that real estate sector has performed well last year? Can I see hands? Very few. How many of you feel that real estate sector has not performed well last year? Okay, so many of you. Now another question, that how many of you feel in next 1 year real estate will perform better? Good. Okay, so a lot of optimistic people. Modi effect, I hope so. So good. Good to be among optimistic people out there. Sorry. So what we'll do today is that we have divided the whole India, tier 1 cities, into 4 segments, that is 4 zones: north, east, west, south. North would be entire NCR, which would be Noida, Greater Noida, your Delhi, Gurgaon, Faridabad and Ghaziabad. West would be Mumbai, MMR we call it in the real estate language, which consists of Thane, Navi Mumbai and Mumbai. And then Pune in the west, south, Bangalore, Chennai, Hyderabad, and east, we would be covering only Kolkata, and then we would be looking at tier 2 cities. So now, before I start, again, let's understand from you. We have 4 zones. Let's take a small quiz. How many of you feel that north region has performed better than all the other 3 regions? Can I have a hand? Okay. How many vote for west? Nobody. South? Okay. And east? No. So maximum people have voted for south. Let's see what comes out of this presentation now. So let's start from the top. This is a known story. GDP has not been doing well because of the global economic scenario which is there. You have last 5 quarters less than 5% growth, which itself doesn't look good for an economy like India, which is an emerging economy. So at 1.5 trillion, if you are growing at less than 5%, it's something which is subpar. If we see the other parameters, again, that also is not good. Your inflation, thankfully, has come down into now at 6.7%, but it has been persistently high at 10% across last year. So across last 2 years. So again, these are not a good signal for a real estate market. So based on this, now we'll analyze how different zones have performed. So the first, the key factor that we look into a real estate sector, and definitely in your industry also, the supply, how much of supply has come. So if we compare 2012-13 to 2013-14 fiscal year, we have seen a drop of 14% in north, whereas east has seen a drop of 45%. But across the board, the new launches have come down. That means the new supply that has come in this market in last 1 year has been low as compared to the previous year. Again, not a good story. If we look at the other parameter, which is again very important, that how this segment has moved, and especially this is very important for the manufacturers and the suppliers to the real estate sector, which is the sector that's performing. If you see on this slide, luxury segment has taken a hit. Now, one reason for that is because your GDP not doing well, economy not doing well, your income levels have not increased as what was expected, and suddenly that has a toll on your luxury segment. However, if you still see, even affordable has not done so well, and it has been shifted to mid segment. Now, what could be the reason for that? Because if economy is not doing well, of course you could have seen growth in the affordable segment, but it didn't happen that way. The reason being that even affordable segment, the developers are not able to provide anything in the affordable region. The reason being that your land prices have gone up, your inflation has gone up, your cost of construction has gone up because of that. At the end of the day, it has become difficult. So most of the affordable housing has now moved to the mid segment. So suddenly if you see, except West, everywhere there is a huge shift towards mid segment. So this is the segment which is growing. So if you see from your end customer perspective, the segment that has grown last year is the mid segment. Now sales. Unfortunately, this again tells you a very grim picture, especially NCR, a 37% drop. Last year has been really bad. Sale has fallen across all the zones, that is east, west, and if you see, north has taken the hit maximum. So if you see, there were around 95,000 units which were sold in 2012-13, that has fallen down to 60,000. And especially this is again in north, if you see, this is because of Noida and Ghaziabad. Gurgaon and all have really fared worse. Now the next parameter which we see, similar to your industry, is the inventory that's there in this market. Now if you see, the thing that should have gone up, like your supply and your sales, that has gone down. The effect is the inventory which should have come down has gone up. Now again, this is adding pressure on the builders, because suddenly you are sitting on a huge inventory. Sitting on a huge inventory means that the cash flow has been negatively impacted. The moment that happens, it's really challenging for them to deliver. So if you see, there has been 24% rise, especially in the northern region. So that has again not done very well. If you see south, still it's doing well. But if I have to divide south also in the three cities, Bangalore, for a change, is the only city which is actually holding. Rest everywhere it's a challenge. Now coming to one parameter which we use to understand, which is called inventory overhang. This means that the number of months, if today there is no supply that's coming in this market, nobody launches a project, how many months will it take for the existing inventory at the present run rate of sales to be sold in this market? If you, the parameter that you use, generally we use in the real estate sector, is 24 months. If it is below 24 months, it's a healthy sign, which was there in 2012-13. We see 2013-14, it has gone to more than 30 months. On an average, 36 months, MMR and all are nearly approaching that. Mumbai, the biggest market, if you see, the Mumbai island city has reached to 50 months. Now that's again a cause of concern for the developers. Now seeing how the prices have moved across, still prices have moved up. So it has not happened like in other industry that, okay, the things are not happening, I give discount, I just sell it at a lower price. It didn't happen that way. Prices have gone up, although it has not, it didn't rise as much as was expected in double digits, which was the case in 2012-13. But however, some of the cities like Ghaziabad and Noida, they have done well in north. If we see the same thing in west, you have Thane and Pune still maintaining because the capital prices are low there, but Mumbai has been impacted a lot. Navi Mumbai has remained unchanged. I look at south. Now south, if we see, Bangalore has done well. Still it's rising. Your inventory overhang situation is not that bad, although it's not so good, but if you compare with other cities, it's still much better. East, again, the capital prices rise. There has not been much of appreciation because everybody is sitting on inventory. So rising price mindlessly doesn't really help the sector. So this gives the overall picture of tier 1. Now this is one of the most important thing, and especially people who are serving the north, this is a cause of concern. What has happened in north? In NCR, for last 4 years, from 2009 to 2013, there were 1,10,000 units that were supplied on an average of 25,000, 26,000 per month, per year, sorry. What is committed in next 4 years is 6 lakh units, more than 6 lakh units. Now, you are saying that the developers who have been giving you around 26, 27,000 units per year, you are expecting them to deliver 1,50,000 units per year. Now, nowhere it's possible. You will see lot of delays in this project. This will actually drive away investors a lot. So NCR market is one of the market which we feel could face lot of trouble. Compare it with other markets, South is a market which we feel should do much better. So most of you were right when you said the South is something that you feel has done well. They have done well, and Bangalore is expected to do well. So this is just a broad comparison. So if you see North, there are more reds. That means that North is actually not doing well. South is much better. East, since it's only one city and it's not a big market, so we would compare West and South, then South is much better than the West as of now. So this tells you the story of Tier 1. Now let's see what is stored for the Tier 2. So we have compared 25 cities. Now, of course, Ahmedabad is on the cusp of Tier 1, Tier 2 from the residential market purview. But if you see the bigger markets, the supply has fallen. Like Ahmedabad, if you see on the top, the bigger markets, the supply has fallen a lot. Whereas, if you see the smaller markets like Nagpur and all, they have slightly done better. Jaipur has done better. So from the supply perspective, they have really come up well. So these are the cities where you will see the growth coming across. Because Tier 1, suddenly there has been a situation, a demand-supply mismatch. You should see the growth in Tier 2 coming across, and specifically in the cities where the real estate market has not developed. Although it's small today, but going forward, definitely, it has to increase. It has to support the India growth story. Similarly, if I see absorption, the same story of Tier 1 is repeated. The sales has come down everywhere except few markets like Dehradun, your Panipat, which are again a relatively small market. Any big market has not a good story to tell you about. Similarly, if we see the weighted average price, not much price rise has happened except 1 or 2 cities. Cities like Ahmedabad and all also have not seen a lot of price rise. But however, a single digit price rise has been there similar to Tier 1. So if you see, Tier 2 has mirrored most of the things of Tier 1, except it gives slightly better picture as compared to Tier 1. Unsold inventory again going up in these cities, not much to talk about. And similarly, inventory overhang, if you see, that has gone in the months. So now even in Tier 2 cities, it has gone more than 24 months. So that's again is not a very, very good situation to be in. So what do we feel about the real estate market? So if I see the last year has not been good. North has been really bad. West also a bit bad. South has been slightly better. East not done very well. The reason being that your global economy has not supported, your high inflation, your service sector has stagnated, not much job opportunities or the job growth has happened in this sector. So that's again taking a toll on this sector. Absorption has come down, that's leading pressure on the developers. Now if you're not selling, definitely you're holding on to the inventory, and if you're not selling, then it impacts your cash flow. RBI's strict stance on making sure that there is not much money flowing into real estate, even that has not helped. And again, across budget segment, your mid segment has done well. So that is one sector that one should target, because there has been a constant shift from luxury and affordable to the mid segment. And this shift will continue because mid segment will continue to grow, because that's where your income should match whatever the budget is there for these mid segments. So you will see most of the growth happening there. And there has been, I'll touch one more point, of course after South, especially Bangalore has been outlier. There is a real estate bill which is already there in this parliament, and you must have heard a lot of things that real estate bill would be passed, and which actually has been done, but in parliament it has to be tabled through parliament. It's a long thing out there. Now, people are thinking once the real estate bill would be passed, the things would be really good. Now, again, the question comes is that how it would be implemented, because there are a lot of loopholes and there are practical problems which this industry is facing. The biggest practical problem is that everybody is talking about single window clearance, a good thing. Everybody wants a single window clearance that, okay, I go and I get all the approvals, because today approvals for any developer, it doesn't take less than 24 months. So it adds to the cost at the end of the day. As an end user, you pay from your pocket. So, but the thing is that that's one of the most difficult thing to do, because you can't have a super minister sitting over all the minister, like an environment minister, your urban minister, your infrastructure minister. You can't have that happen. So even that is something which, how it is implemented, is going to be a big challenge. So overall, the positive, I have been too negative till now, only saying all the negative things. A stable government. A stable government with a majority after 30 years, and a leader like Narendra Modi, who has proved some bit of, although people say a controversial Gujarat model, but actually if you see the growth has happened. So if you see that being replicated at the national level, you should see things improving in next 1 year. Although fundamentally it could be difficult, but on the optimistic note, it should be possible. The sentiment should drive it. So next 1 year, we should see the growth based on sentiments. Fundamentals will follow later. I think, yeah, that's what it is. So thanks. Any question or something?
Any questions?
Yeah, please.
For real estate. Okay, thank you. Just a quick question. How important is for real estate value the kitchen as an investment, a new kitchen?
See, the thing is that if you see the differentiator today, developers are really coming across. If you see from the developer's point of view, if I am providing a luxury apartment, and if I am saying that you pay 2.5 to 3 crores for a particular 1,000 or 1,500 odd square feet, then I have to provide a differentiator. Today, if you see every developer, they have a list of things which are premium. Modular kitchen today, if you see, most of the developer would be providing. If they are providing a unit more than 1.5 crores, it has become something that is essential. So in that way, again, if it is 3 crores, then there is a differentiation, there is a higher brand, higher thing coming across. But as of now, that is very, very important for them to push the inventory. And most of them now have started offering a freebie, saying that, okay, if you buy today, I give you a modular kitchen free. So that has happened, and they are pushing these things. And modular kitchen, because you can't say much about your bathroom fittings and all. Of course, you can say that I'm using a high end, but how do you differentiate? So you will have amenities which will differentiate. Okay, you have a swimming pool, you have a clubhouse, you have this. But in the unit that is being provided, in the apartment that is being sold to you, what else you can provide? Okay, you can provide a wooden flooring, you can provide some wardrobes, but again, that would be standard. But kitchen is something where you can keep on experimenting. So that's where you see a lot of things coming across.
I would like to ask one more question. Like you are saying, the prices have not come down as such, but I think most of the people here sitting in know a lot of black money goes into the land deals. So maybe the figures which we are seeing, that is of the half of the part which goes in the books. And in reality, the figures may be really like to worry about. And another thing, in all this scenario, what I will like to tell all the subordinates here, that sometimes you have an opportunity in distress. Like market is down, lot of things are unsold. Here comes the opportunity for the modular kitchen industry, because they have to add on a freebie. And what's better than a modular kitchen? So in my opinion, we people should not get distressed. We should tighten our belts, and we should be somewhat very much positive about it, that the reality industry is down, because now they have to come and say, okay, we need modular kitchen. Otherwise, if I see scenario about 5 years back or 6 years back, when the reality business was at boom, nobody cared. They just give open shells. Okay, you go buy yourself. Nobody cared who the professionals are involved. Nobody. Right now, at least they are caring about it. I think this is a good thing that reality business is down.
No, sure. Yeah. And my objective was not to really portray a pessimistic picture. When it came to next 1 year, I have said it's going to do well. The supply is already there in the market. Things have been sold. So somewhere at the end of the day, because these things are really, these thing comes into picture when the furnishing of that flat happens. Yeah, so obviously there is enough opportunity. I just wanted to cheer
my subordinates that there's nothing.
So there is nothing. That's what I'm saying. Next 1 year, stable government, lot of things will be driven by sentiments, and that will really tide this sector. Obviously, fundamentals will follow later.
One final question. Hi. I have a question for you. How do you see this market evolving? Today, it's a totally investor-driven market. The end customer is the third or the fourth person who's coming on the purchase aspect. You have a round of 2 or 3 investors coming in before, and then only the end consumer comes in. Primarily, I'm asking this question because the moment the end consumer gets more relevance and is going higher, the definition of amenities will be better and will be more relevant to us also.
End users, yeah.
So, what do you see the perspective of that?
See, the thing is that initially for every market to grow, definitely you require investors who would keep on pumping in the money. You will have enough players coming in and doing that. But unfortunately, you can't take an industry to the next level based only on the investor. Because at the end of the day, there has to be some end user. You can always buy flats and you can keep on churning, but at the end of the day, if you don't have the person living in, it's going to be a ghost town. And there has been a lot of ghost towns which have been built up. In Mumbai, there is a place called Ulve. The whole area has been sold up. You have seen everybody saying, go buy in Ulve, there is nothing, this is going to be the next big destination. Now after 3 years, neither the airport has really taken off. So after evening 6 o'clock, if you go, you won't see even a single light there. So investors can drive to a certain level, but it has to be end user. At the end of the day, this situation in NCR is because it has been investor driven. But it has to change. It has to change. For 4 years, it has been building up. Now it cannot. And that's where you will see the course correction happening. Demand and supply really coming across. And at this equilibrium will be there. And you will see the end users being more and more demanding. So you will see that. One thing is for sure, at this, we don't expect price to be rising very high. Maybe it may stay here, or some small upside would be there for next 2-3 years. Your economy, once it starts doing well, your income will start growing. At some point of time, this gap will reduce. You will see more and more end user coming, and that is the time when they will become more demanding, because end user will become more demanding that I want this amenity, I want this thing in my flat. So you will see that shift gradually happening, and I don't see why it shouldn't happen in next couple of years. So thanks a lot. Thank you.